Good afternoon and welcome to the daily roundup pre-FOMC take here, and we do have the FOMC in about half an hour. And like I said, I just want to go and touch up. We covered this in the European crossover webinar. For those of you that are not subscribers, we do broadcast at 4 a.m. Eastern time, 3 a.m. Central. If you're not trading in Europe, Stelios does record and provides a link about an hour before the New York Open. And the reason that's important, I mean, we set up the scalp levels for the day or short-term trading levels. That is, not everybody day trades or short-term trades, but they'll use this in conjunction with their own levels to go and find a little bit trying to think of the right word, with some confluence here if it's looking to a level that they're looking at also. But that being said, let's go to the news of the day. Obviously is the FOMC. We'll go and take a look at the dollar. My take was, and I'll just offer that, but we're going to stick to the technicals, was that I would look for the dollar. We talked about this since the beginning of the week. The dollar would pair back. Obviously, Draghi speaking yesterday threw a monkey wrench into everything. And then, of course, then Trump had to jump in and augur his complaints, and then the story broke about battles with the Fed governor or Fed chairman. And the reason that that's important is because my take was, even if the Fed didn't cut, my thought was that they would lay the groundwork definitively for the cut in July. But because of that interference, there was some headlines yesterday that the administration should not be bullying the Fed. So to me, that lessens the opportunity for them to be, honestly, I believe, honestly dovish for the next rate cut. If you ask me, the data has been weak. Tell me, with the exception of retail sales, tell me one data that's actually outperformed. I mean, just one. Just tell me one. There is not one. I mean, if you go to the PMI from 3 weeks ago, the worst since 2008. Empire that came out yesterday, the worst drop in record. So I'm saying is it's there for them to go on and provide a rate cut. That's why prior to the retail sales, they were even pricing as much as a 28% cut. I think it's down now to like 21%, and that was for this meeting. But that being said, I think that they will hold. I think that they're going to tepidly lay the groundwork, which may allow the dollar to pop. I think initially the initial reaction will be for the dollar to jump up, come back in. I think that Powell will, talk about the overall economy. I think that will allow the dollar to come back up. And I don't think he will embrace the potential for dovishness I thought that would have been in place had we not had the issue with Draghi and Trump. So, or primarily Trump. So I think that we may get the dollar may try and push back up, but I don't believe it's going to have legs on it. So with that being said, let's look where we're at right now. Well, initially, if we did see a bigger move, we're looking at this 98.17. But think about this. This is that big key weekly level going back since since Moses crossed the desert, so to speak. And that also confluenced with the 61%. The dollar looked like it was on its way down as we broke again beyond that, but we've come back, and obviously things have jumped out where we push back up. Can we push back up in this range? We possibly can, but my thoughts are I don't think it has enough legs for another move up. And the reason is because I think they will ultimately cut in July. They just may not foster or embrace that thought that much, or as much I think it could have been expected. So where does that take us with the euro dollar? We'll go and take a look here. So the big levels here on the euro dollar, because you have to look at the bigger levels, so to speak, when you're looking at something, where you're seeing the potential for increased volatility on either side. So we have it on our, we did our buys chart from this morning. Obviously, generally our levels are far closer than this as they look for the levels that are what we're expecting the market to run into over the next, let's say that same morning over the course of 24 hours. But we had to make this quite a bigger spread because of this potential for volatility. So to me, on the upside, it's going to be this 1262. 1247 is a key area. That was actually our bias chart, I think, for the last 2 days, and the market came very close to hitting that and missed it by, I think, or hit it just the other day right on it. We rotated lower, and yesterday we came, looks like we were just about going to come close to it. Also, actually, when we came on the air on the European crossover, the market was, I think it was traded 1246 or 1243, and then on the European crossover, that's when the Draghi speech was hitting the wires. But that being said, here's the key resistance level. I think we could make a stab, and then they'll probably, they'll dip it back down. We'll see where the market goes to, and you definitely don't want to get in the way of either one of these moves once the dust is settled. I think we'll see the initial knee-jerk reaction on the announcement, but it's not till after the Q&A we're going to get a chance to see where this market wants to go to. And when they do want to go, generally you don't want to get in the way because they generally keep pushing. But on the downside, we're looking for potentially 1128 if the Fed were to come out with some gangbusters and not embracing at all any dovishness. And that's the thing that throws a big wrinkle into it. Like I said, yes, Draghi came in and said what he needed to go and say, and I think that longer term that augurs for the euro to potentially move lower. But with all the interference that we got from the administration and the story breaking about, which there had been thoughts about that already, but it broke out more cleanly. Even Larry Kudlow denying that Fed Chairman Powell would be demoted. That you just don't, the Fed's probably going to want to make a stand, and agreeing or going along with potentially the dovishness may seem as if they're relinquishing or playing into what the administration wanted. So I don't know how that's good. To be honest with you, I'm not sure how we're going to go and play out. But I think that if in light of that, but if the dollar does push higher, I don't think it's going to have legs, because I think we will get a cut in July. So here's what we're looking for as on the euro: 1128 and 1262. Let's go on and move on through the curve right now, or through the pairs. Let's go and look at the cable. We've already had a nice little move up here in the cable. Let's take a look at where we stand here. And we've actually, if we were to push much higher here, and we've already had a pretty good move. Once again, you got to think of where the market could push to. And this market is extremely oversold. So potentially we could, I would say we wouldn't make up to 27, probably maybe we'll get up here to like 26.79 if the dollar, were to ease back. So you want to keep that in mind. The bigger number on the bottom has been this, and we're looking at this 25.26. If the market pairs back, once again, I think we've been in such a fall here. I think that on any pullbacks, the market's probably going to go and want to try and defend that 25.26. And also, anybody who's bearish, you got to put yourself in their shoes. This may offer an opportunity. Someone might say, you know what, wow, it's been a pretty good move already. Maybe I'll use some of this opportunity on the dip to pair back. Now, that's on a medium, a very short-term basis, but any pullback may be used as an opportunity to cover, and we'd be looking towards this 25.26. Pulling into the dollar CAD. We did see the dollar CAD going and pair back. When we did our analysis coming into the week, we said, hey, look, it would require 2 daily closes above 34.12 before the bulls could get giddy, and we were simply not able to go and do that. And then we did go in and slide back yesterday as crude really began to take off, and we opened the door to move much slower. We came into this 33.82 and even went beyond that. In our bias chart, as we came into today, we're looking at 33.25. The low so far has been 33.36. But we'll see how this, obviously if the dollar, we can even press beyond that. And let's go and take a look here. Just trying to hit these levels before we move into that FOMC. So there's where I came up with the 33.25. You see that? Potentially, if they really knock them good, 33.08. But I'm looking for 33.25, but we've already fallen. So we'll see where we stand. Like I said, I think it's going to be herky-jerky in this FOMC because of all that's transpired over the last 24 hours. Looking at the dollar yen. We're keeping it pretty tight here, relatively speaking, here in the dollar yen. On the upside, we're looking, and it may not seem that far away, but I mean, it may seem much further away than what we are, but we're looking potentially on a stretch would be up to 891. Now, the big pivot is 927, but that'd be one heck of a move to try and make it up there. And what we've been looking for has been recently has been 876, and that's been holding like a champ. I think we did make it up to 882, but we've had these dips back. And like I said, for the last few days, we've had that 876. This would be a pretty big jump if it gets up to 927. So we're just going to go with 891 here, right there. And if the market wants to jump up there, I think it may have a tough time, but we shall see. I think that even if they do resolve the issues with China, some of this stuff has already laid itself. Basically, like, you know, talking analogy, once you get the termites in the house, I mean, or into the wood, it's eventually there's going to be damage. And I think the economy will slow down, and it will open the door for a rate cut. And I think we will get that rate cut possibly as early as July. And I think that will come to fruition. And why I believe that in that case, the dollar, although it can rally, I'm not sure that it will have, or at least I don't believe will have the legs for another rally. Looking back here on the bias chart support for the cash dollar index, we're looking for 97 even, and we'll take a look at that here. This is on the 2-hour chart. So if we were to get a pretty good little surprise, there's some support here at 21, but they're going to push this 97. And remember, 96, 91 was that area of resistance we had, which actually hit last Monday after, not this past Monday, but the prior Monday, and quickly sold off. And the market was really having a tough time. And even when it got above 97, it dipped back and then came back up. Obviously, the retail sales really got that thing pushing and going, but it'd be 97 with a push all the way to 96, 91, but that'd be kind of extremish unless the Fed does really come out and just embrace the dovishness. But then you'll be looking at an extreme around the 96, 91 area with some good support probably to reclaim that 97, and we'll see where it goes if you're playing it in that direction. Don't expect anything out of the dollar peso. It's been dead money. 1903 and 1923.6 have been on the upside that we've looked at. We'll go on and quickly just jump in just briefly onto the cross rates. The Aussie yen is kind of holding its own right here, and we'll jump in here. But one thing has been a surprise here. You can see how well the guppy has popped up. Very, very oversold. Potentially the guppy coming up here to this 37.11 area here. We're not even that far away, and actually even went beyond what we were looking for. I think we were looking for at the time with the guppy. Now that was this morning on the initial was well 36.69, so that wasn't so bad. But we pushed beyond that. I think we could make it all the way up to 37.11. Potentially Aussie yen's holding up. Also, as far as we didn't get a chance, and we'll go on and touch back into that, we have seen the Euro Aussie pop back up here. We ran out of gas actually to the pip here on this right here we're looking here. And I think I might have transposed this. I had 63.34. I don't know why I came up with that, but it was actually on the level here is 63.43, not 34, and it hit that to the pip, and then we turned right back down. I think we took it out by 1 pip. Looks like it was 44.9, and we rotated lower. Let's go back into the main screen because I do want to touch on the Aussie dollar. This is our bias chart support actually for today, but it actually was yesterday, and we've had it actually for the last couple of days. It's 68.31. This one went bad. It missed it by a pip. I think it was 1 pip, and we've kind of rotated up. Look, the Aussie dollar is extremely oversold. And I had mentioned since the beginning of the week, even though it's moved lower, if you ask me, it's positively diverged because there's been times where it had the chance to really push lower, and it's kind of been holding its own. If you can see here, it held this 68.55 on the dip back. We have the potential, I think, to move back higher regardless of what the Fed does, and we do have on the 2-hour, look at this nice little hammer bottom. I think that this is one pair that can continue to move higher because it's been so banged up. And I think we can, especially if things were to, and probably have a little bit of a bid also. What the thinking is, Trump was saying about him and Xi Jinping meeting at the G20. that's provide probably a nice little undertone bid, and it's very oversold to start with, and has, if you ask me, has been positively diverging despite us continuing to fall here. So that's what I have here for the pre-FOMC New York Daily Wrap Up. Thanks for joining us, and good luck trading here on the FOMC.